Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday the 14th of February in London. I'm Stephen Carroll. Coming up today, US President Donald Trump moves to impose reciprocal tariffs on numerous trading partners. Bloomberg learns that HSBC is preparing for a fresh round of layoffs, plus dialing back diversity initiatives. JPMorgan's Dimon says he'd be cutting what he calls stupid DEI costs even without Trump. Let's start with a roundup of our top stories. US President Donald Trump has ordered his administration to consider imposing reciprocal tariffs on its trading partners. The proposed tariffs would be customised for each country and aim to offset their own levies on US goods and non-tariff barriers.
Again, whatever they charge us, we're charging them, so it works out very well. It's a beautiful, simple system, and we don't have to worry about, we're charging too much or too little.
Reciprocal tariffs would amount to Trump's broadest action to address US trade deficits. Bloomberg's senior economics reporter Sean Donnan says the focus is now on how other countries tax consumers.
Value-added taxes, or VAT, and that's big in the EU. There's more than 160 countries in the world that use a VAT. The U.S., of course, does not. This kind of rekindles a battle that the U.S. has had on and off with Europe since the 1960s over how to treat taxes and trade. But we're going to end up with some big numbers aimed at some big trading partners. We just don't yet know what those numbers are going to be.
Bloomberg's Sean Donnan speaking there, as Trump also told reporters he would enact import taxes on cars, semiconductors and pharmaceuticals over and above the reciprocal tariffs at a later date. The US president has already imposed 10% tariffs on Chinese goods and imposed plans to put 25% duties on all US steel and aluminium imports next month. The latest salvo on tariffs came as Trump and the Indian Prime Minister Narendra Modi met in Washington. The two leaders agreed to begin negotiations to address the US trade deficit, with Trump doubling down on his tariff message in a joint press conference.
India's been, to us, just about the highest tariffed nation anywhere in the world. They've been very strong on tariffs, and I don't blame them necessarily, but it's a different way of doing business. It's very hard to sell into India because they have trade barriers, very strong tariffs.
The president's comments came as Narendra Modi said the two men had agreed to more than double bilateral trade to $500 billion by 2030. Trump also said the US would sell the F-35 warplane to India as part of a bigger commitment to deepening defence ties. The US has been reluctant to sell the planes to countries where its technology might be stolen by adversaries. In Europe, leaders are still coming to terms with the US shift on its policy towards Russia after Trump and Putin's surprise call to discuss Ukraine. The country's president, Volodymyr Zelenskiy, says he's warned the US leader that Putin cannot be trusted, adding that Ukraine must be part of any peace talks.
Today we cannot predict how it all will go on, but we must be strong. We will be very careful. We need allies and fair partners. We cannot accept, as an independent country, any agreements made without us.
Zelenskiy's words spoken there by a translator, as the Trump administration also told European allies they should buy American weapons and military equipment to maintain the NATO alliance. This, as Bloomberg Economics calculates, that protecting Ukraine and expanding Europe's own militaries could cost the continent's major powers an additional $3.1 trillion over the next 10 years. HSBC is planning a new round of job cuts next week. Bloomberg understands the changes to its investment bank workforce will affect employees globally, starting in Asia. That's as CEO Georges Elhedery continues his overhaul of Europe's biggest lender. Layoffs will be based on performance, job duplication and simplification, with some already underway in the firm's markets division. JPMorgan CEO says the bank will scale back spending on, quote, stupid diversity initiatives that he sees as wasteful. Responding to an employee question, Dimon said plans to cancel some schemes were about costs rather than backlash from the Trump administration. He also told reporters on Capitol Hill that many would like to see more efficient governance when asked about White House directives.
About Elon Musk, his work with Doge, a lot of controversy surrounding it. What do you make of this government waste?
I don't know all the things they're doing, but there is no one I know who doesn't think we should have a more competent and effective government.
Jamie Dimon also reiterated JPMorgan's commitment to working with Black, Hispanic and LGBTQ communities on the company town hall. And the UK Prime Minister Keir Starmer met China's top diplomat as the two nations look to improve ties. The British leader joined a meeting between Foreign Minister Wang Yi and National Security Advisor Jonathan Powell. James Wilcock reports.
Keir Starmer expressed his intention to build a consistent and respectful relationship between the UK and China. And according to China's Global Times, Foreign Minister Wang Yi said the UK government had started the process of improving relations and looked forward to deepening cooperation on AI and climate change. Both China's top diplomat and the US ambassador to Britain were in Downing Street yesterday. It showcases the balancing act Britain is trying to pull off, trying to build ties to the world's second largest economy while avoiding the ire of the US President Donald Trump. In London, James Wilcock, Bloomberg Radio.
Those are your top stories. On the markets on Thursday, we saw stocks gaining on Wall Street and the dollar falling as President Trump moved to impose those reciprocal tariffs, but not immediately. The S&P rose by 1% into the close, while the US dollar dropped by 0.7%. It's holding around that level today. Treasuries rebounded from their post-CPI slide after PPI data pointed to a low reading from the Fed's preferred PCE inflation gauge. 10-year yields dropped by 9 basis points yesterday. Today they're holding at 4.53%. We did see the Eurostoxx 50 index climbing to a fresh record, up 1.75% at the end of the day. In Asia today, we're looking at the Hang Seng adding 2.1%. The Hang Seng Tech Index is up by 2.8%. Apple's plans for AI products in China sparking further optimism in that sector, as we're looking at US equity futures just up 0.1% for S&P E-minis. Well, in a moment, we'll bring you more on Donald Trump's plans for reciprocal tariffs. Plus, we'll talk you through the market reaction to the latest news out of the US. But just a word first on another story that caught my eye this morning about a hedge fund that's using AI to do the work of analysts and producing better results. Our colleagues in Australia, Harry Brompton and Georgina McKay, have the story of the fund Minotaur Capital in Sydney that's using AI models instead of analysts. And their bets on global stocks returned almost 14% in the 6 months to the end of January versus just under 7% for the MSCI All Country World Index. Now, using AI in this way isn't new, but it is something that has yet to prove itself across all cases. Mixed results in general. Not clear that AI models actually deliver better returns. But Minotaur's co-founder, Amina Rosenberg, says their large language model digests about 5,000 news articles daily and can churn out 2,000-word reports on any given global stock that it deems to have the potential to double in 3 years or improve tenfold in the subsequent decades. They combine this with making their own inquiries and making investment decisions. Seems to be proving their worth so far. She says the cost has been about half of that of a junior analyst's salary. So that's one hedge fund making decision on AI. You can read the full story on Bloomberg.com and on the terminal. Well, let's bring you up to date then with Donald Trump's latest announcements on tariffs. The US president talking about imposing reciprocal levies on trading partners in response to their tariffs, regulation or non-tariff barriers. Our senior editor, Derek Wallbank, is with us for more. Derek, what more can you tell us about what Donald Trump is planning here?
Well, Donald Trump says that this is going to be a really simple determination. Whatever tariffs and levies individual countries have on U.S. goods, be that overall, be that specific products, that the U.S. will match. In practice, this is a quite complex determination that requires, at its most maximal level, going through every single customs level for every single country and every single product or product class, figuring out what those numbers might be, and then instructing for equivalent tariffs and levies on the same. This may get done exactly at that idea, or it may get done in a more simple way, kind of figuring out what an average might be and then trying to put that on. This is all going to get pushed back for a little bit of a ways because Trump has asked that there be a study of this done country by country and that those numbers come back to him as soon as possibly April. Then you would figure that there's a certain amount of time before that gets implemented.
Well, that timeline has been really key to the market reaction. So it looks like we'll be a couple of months waiting for that. Does that open the door then to negotiation from some of the countries that could be affected? We've been reporting on this meeting between Narendra Modi and Donald Trump.
You read my mind. Yeah, it's. I think there had been some market thought that this was going to be a bit like a light switch. It was going to flip on. Trump was going to, have these numbers in mind or something like that. That's not really the case. And as we've seen with Trump so far, anything that looks like a delay looks like it's the start of negotiations. Now, Trump has said there's not going to be exceptions to this, but at the same point, we have seen him already pull back on some tariff threats for promises that may or may not be related to the issue at hand. One great example of this is that Trump said that there could be a way out of steel and aluminum tariffs for Australia because of their overall trade balance with the United States, as well as Australian purchases of aircraft. So I do think that there is some read-in that this may open the door for negotiations.
And interesting too to have heard from Peter Navarro, Trump's trade advisor, dismissing concerns that these tariffs could push up costs for US consumers.
Yeah, that has been a Trump administration view for a while, that this wasn't going to be too harmful. But I will remind that in Trump's first term, we did see a fair amount of industry-specific givebacks to try and reduce pain that was coming. I'm thinking agriculture specifically. That wound up being quite a substantial expense to offset that. And we also saw the Federal Reserve at that point try and take some actions to minimize tariff pain. So whether or not that is the case in an absolute term, or whether he's talking about that there may have to be some offsets, remains to be seen.
Okay, Derek Waldbank, our senior editor, thank you very much for bringing us up to date with this latest round of tariff announcements coming out of the White House. And as Derek was mentioning there, the longer timeline for these tariffs have given some relief to markets. And we've got our market supporter Valerie Teitel with us for more on that now. Valerie, just talk us through what exactly happened on markets after these announcements.
So it's all about the implementation timeline. We were braced for the fact that we could have tariffs, reciprocal tariffs, announced and implemented yesterday, but that was very much not the case. It was another delay, a delay until April 1st, which into markets' words is basically light years away. And that paves the way for a lot of negotiation between countries and the U.S. to take place then, and maybe diminishes the risk that we actually do get reciprocal tariffs implemented in April after this study is completed. So that paved the way for stocks, for risk assets globally to trade very well into the close yesterday. We had the S&P 500 closing up 1%. The dollar also traded softly afterwards. It fell 0.7% yesterday. The dollar is quite substantially off of now the January highs that we saw before the inauguration of Donald Trump. We're now over 2% off those highs, all down to the fact that there is delay after delay, which basically paves the way for a negotiation and paves the way for these tariffs really not to be implemented in the end.
Yeah, indeed. Interesting too that we had a piece of data out of the US yesterday. This is the producer price inflation number, hotter than expected, like the CPI, but not worrying traders as much.
There is a bit of nuance in this one, Stephen. The components that matter in the PPI that feed into the Fed's favored measure of inflation, which is PCE, those all came in soft. So if you ignore what the headline PPI number was and just strip out these important components, it shows that the monthly January PCE component won't be as hot as feared after that hot CPI. So we did very much see a big retracement when it comes to the Treasury market, a big rally, near 10 basis point rally in the 10-year yield, erasing a lot of the weakness in the Treasury market post CPI because of this. So a bit of nuance there. Yes, the headline was hot, but the components that mattered came in soft, which allows maybe the Fed to take a breath of relief on that one.
Yeah, indeed. And of course, the expectations of the Fed moving on the back of that as well. I mean, put this all together for us, Valerie. So we're now thinking about the potential inflationary impact of tariffs being further down the line. If we're looking at the reciprocal measures being looked at from April, at the same time we have those indications that you've pointed out to from the PPI data pointing us to where the path for inflation is now. What is the outlook for treasuries from here? What's the direction of travel?
Well, look, I think a lot of it does depend on the politics. If we get further information that these tariff delays basically lead to negotiations, very much like what they did with Mexico and Canada last week, we could see a further substantial rally in treasuries. A lot of the yield rise recently has been on those inflationary concerns from tariffs. But if it turns out that this just turns into a bigger negotiation without any tariffs be implemented, that's a pretty good bull case for yields to be lower and the dollar to be softer. And hey, throw in that equities also trading above their all-time highs as well.
Well, indeed. And just a word, too, on European stocks, hitting that record high in the Euro Stoxx 50 yesterday. Something to celebrate. Yeah,
the Euro Stoxx 50 index, this is the mega cap index here in Europe, surpassed its high seen 25 years ago, Stephen. It's taken 25 years for European stocks to surpass the dot-com bubble era highs. A lot of that has to do with this tariff delay, but also throw in the mix of that the hopes around the end of the war in Ukraine seems to be bolstering the bull case for European stocks at the moment. We know that European stocks have very much outperformed U.S. stocks year to date. Euro Stoxx 50 futures are up some 13%. You compare that to S&P mini futures up only 3.5% on the year. So the bull case for European equities seems to be strong at the moment.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.